Of declines all through this week. What we've seen is a 127-point knock on the Nifty today. We've seen the Nifty IT absolutely flat. Banks, though, down 1%. The PSU banks also down nearly 1%. Private banks continue to underperform. You've seen the Nifty 50, the breadth being 2:3, so a decent breadth, though, versus yesterday. The Nifty 500, though, looked increasingly weak, 1:3 on the breadth on the Nifty 500 index. So broader markets underperforming, and you saw a knock of around 1.2% on the small cap and 1% on the Nifty mid-cap index. In terms of sectors, consumption didn't have a great day after the kind of moves it showed yesterday, showed some strength, but today we slipped around 0.5%. Auto, though, continued its up move, 0.7% higher on the Nifty auto index. IT was flat, I did mention that. Realty was the top loser, and PSU banks were down 1% as well. Within the Nifty 500 basket, well, some quick gainers and losers, and what we saw was CIE Auto, SRF. SRF was down 9%. Adani Green, Indesin, Acuitas, Newgen, some of the names which closed deep in the red in trade today. NTPC Green, on the other hand, was up nearly 7%. Aditya Infotech, Graphite India, HEG are just some of the movers. MapMy India also moving upwards. You saw some good moves from some of those names. But on to very quickly what the FNO indicators are and what that is suggestive of the day of trade of Friday. Sajid, any respite whatsoever?
Well, no respite. We started off with a weak note, and as the crude inched up closer to $99, we saw more weakness coming into the market, and a lot of rollovers happening from the July to the August series there. But if you look at the Nifty there, the Nifty has seen some kind of short positions getting added towards the end of the day, but it's actually the Nifty August that you need to look at because that gives you a good indication of the kind of rollovers which are happening. The Nifty Bank, the July series saw almost flat open fall there, but you look at Nifty August, Nifty Bank August, and you'll see a good set of rollovers happening there. The index itself down nearly 0.9% in today's trade. Look at the look at what the call and put writing which is happening at this point in time. You will see that the July 28, which is the monthly expiry, there's some unwinds of puts happening at higher strike prices, 24,000 and 24,200, but good amount of call writing happening at 23,800 and 23,900 there. And if you look at the distribution, for now 23,800 is holding up a good support for the market, and the market ending just below the 23,900 mark after on the back of that call writing that happened in the last 1.5 hours, 90 minutes of trade or so. Future gainers, included stocks like Hero Moto, where we are seeing some shorts getting covered. Nuvama is seeing short covering, and Bajaj Holding is seeing a short covering. In the losers pack, you had IndiGo, one of the stocks where we saw stock down nearly 6.2% of the earnings. The stock has run up in this month nearly 16 to 17%. So there's some profit booking which has been taken for IndiGo Bank. But SRF long unwind seen, and Adani Green is seeing some short build up happening in today's trade. If you look at the open interest gainers, you have Divi's Lab, where the short build up supply is up, open interest is up nearly 20%, and the earnings came out today. For that, there's a short build up happening there, and BHL is seeing a short build up happening. So 19 to 20% jump in open interest for these companies in open interest. Open interest losers include stocks like Vari Energy, where there's a short covering happening. Nuvama is seeing a short covering, and Patanjali Food is seeing a short covering there. So we end today's trade on a weak note, nearly 1% down. Nifty IT almost flat, but Nifty Bank down nearly a percentage, and for now 23,800 is holding off, and it's all about how the global cues come in on Friday morning, and we are already seeing crude inching towards $99. So that's going to be a weak setup for Friday.
Okay, week set up for Friday, at least at this point of time. You had Interglobe Aviation also come out with numbers. We'll have, and that's flashing on your screen, in fact, bottom of your screen. It's quite a miss, frankly, and it's essentially fuel costs doubling over the last quarter, which is what is causing that EBITDA margin pressure that you can see. And as a result of that, we've seen a very mild loss versus what was expected to be a profit in this particular quarter. I'll just quickly run you through the numbers as well in terms of what Interglobe has posted. Essentially, that will set us up well for Friday's day of trade, because you're very likely to see a reaction on Interglobe. 24,584 is where the revenue number has come in at, versus the 24,082 crore number which was expected. EBITDA came in at 3,752 crore versus the 5,633 crore expected, and margins therefore versus the 23.5% expected, they've come in sharply lower at 15.3%. When you're looking at PAT, therefore, was expected to be around 1,650 crore. It's another washout quarter, negative 400 crore on the profit after tax number, largely led by fuel costs. So Interglobe is going to be one of those stocks which are going to be under pressure tomorrow. So we'll wait and watch as to how that plays out. But it's a miss on the EBITDA and the PAT, which is the profitability element of Interglobe Aviation. The other one, of course, will be Infosys, which will come out with numbers very shortly, would be my guess. But we'll wait and watch as to how those numbers pan out. But essentially, you've got an expectation of a very weak set of numbers also expected by Infosys. But let me in fact go across to Avi. He's joining us with how Interglobe Aviation's numbers were. Avi.
So Interglobe Aviation has come out with its Q1 FY27 numbers, and the numbers are looking very poor, since the revenue, although is in line with what the street was estimating, but the EBITDA, which is a key operating metric for the aviation industry, has come way below the expectations. The expectations were of 5,633 crore rupees, but the EBITDA has come in at 3,752 crore rupees, which is a miss of almost 33% on the estimates. And while the street was estimating a reported PAT of around 1,650 crore rupees, they have in fact reported a loss of 382 crore rupees. So a loss in return of an expectation of a profit is a big miss for Interglobe Aviation. Talking about what has caused this loss is because of fuel price escalation, adverse impact of the forex movement, and the disruptions related to the Middle East crisis. The ask growth has come in at 2.9%, which is slightly below what they had guided in the range of 3 to 4%. So ask growth is also slightly below what they had guided for, and the load factor is down by 1.3 points, while the passengers transported have increased by 70 bips. They have guided that the fuel cost has increased by a mega 85% on a yearly basis, and the fleet size stands at around 432 aircrafts. And it is important to note that 9 passenger aircrafts were decreased in the Q1 of FY27. Talking about the guidance that the management has given for the upcoming quarters, the management has told that the ask growth will mostly be flattish for Q2 as well on a yearly basis, and the utilization is expected to improve progressively as they move beyond Q2 into the rest of the remaining year. And the near-term uncertainty from fuel cost and rupee depreciation will continue to hamper Interglobe Aviation's result as the coming quarters come.
Okay, thank you so much, Avi, for that. Of course, we await Infosys' numbers, but while that's happening, let me quickly go across, slip into a very short break, take a bit of a breather, come back, talk a little bit about what cues we want to watch out for tomorrow's day of trade. Also, taken some technical analysis of what the levels are that we need to look for on Friday's day of trade. Cues for tomorrow. Thanks for staying with us. Meryl here with What to Watch.
Right, so these are all of the factors that investors should keep on their radar leading up to the 24th of July. Starting first with Forex reserves data and HSBC manufacturing, which is going to be in focus from India. Globally, we're going to be watching out for S&P Global Manufacturing PMI coming in from UK, US, Eurozone, as well as Japan. From Japan, also watch out for their CPI data, which is due on the day as well. In terms of global earnings, it's American Express and Verizon. Do watch out for these names as they're going to be reporting the results. And back home in India, Nifty, from the Nifty pack, we've got Shriram Finance, SBI Life Insurance, Tata Consumer Products, and NTPC. All of these names from the Nifty pack are going to be in focus as well. In terms of corporate actions and board meetings, do watch out for Jupiter Lifeline Hospital. That stock is going to be seeing a stock split. This is a record date for a 10 rupee share to go to a 2 rupee share. So do watch out for that counter, which could be in focus as well. In terms of lock-in periods, Shadowfax Tech is going to be seeing 45% of its equity share capital coming out of a lock-in period. So we could see some supply pressure on that front. And in the primary markets, Caliber Mining and Logistics IPO is going to be listing on the exchanges. So that's all of the key counters for you to keep on your radar on 24th of July.
Okay, thank you so much for that, Meryl. We are also joined by Osho Krishan of Angel One. Osho, great having you. Good evening. Talk to us about what Friday's day of trade could look like. What can we expect? It's been a tough week.
Very good afternoon, Harsh. The
Good
overall
afternoon.
today's session has been very fragile. It has been very weak. There has been strong corrections in the benchmark index. So overall, it was expected that with the kind of movement we have seen in the last trading session, it was expected that we might see some kind of sell-off, or we might see some kind of selling pressure in the market. But today, again, Nifty has tested the very crucial support zone of 24,800, 24,780. So this is again a very fragile juncture for Nifty. If there will be any further corrections below 780 levels on the spot front, then I expect that the zone of 23,650 followed by 23,500 is inevitable. One can look for even further corrections in the market. But again, the only positive development that we are witnessing in the market at present levels is India VIX has not seen much of a spike. India VIX is again around the zone of 13, 13.5. So there is not such concerns on the volatility fear index. So I expect that if there will be any kind of positive development in the market overnight, in the US market overnight, then we might see some kind of a strong momentum or a strong technical pullback from these levels, because historically these levels has cushioned Nifty and we have seen some kind of decent reversal from these levels only. So I'm expecting tomorrow will be a crucial zone, whether Nifty will be able to maintain a sideways juncture or whether it will be having a kind of a breakdown. So tomorrow will be a crucial juncture. Again, I will be on 23,800 and 780. If that will persist and that will get sustained, then we might see a reversal. But again, on the higher end, 24,000, 24,100 is a very strong hurdle. So until we witness a kind of a decisive surpassing of 24,100, till that time we are not very much bullish, but we might look for buying opportunity in tomorrow's session for 24,000 and 24,100 as a target.
Okay, all right. Osho, stocks.
Two counters are looking very positive on the daily time frame chart. The first one is India Glyco. India Glyco has seen a very decisive move. There has been a bullish engulfing pattern on the daily time frame chart. So I'm expecting that we might witness a further upward movement in the counter. The highest targets are around 1220, followed by 1245, while it will be advised to keep a stop loss of 1130. The other counter, which has seen a decent movement in today's trading session, is Nuvama Wealth. Nuvama Wealth have seen a very strong momentum, and I'm expecting that it might even touch 2000 kind of a zone in the coming period. So that can also be seen as a buying opportunity. And for a safer side, 1900 will be the advised stop.
How do you look at stocks like IndiGo, numbers weak on the back of fuel cost escalation, and then if you also look at some of the pharma stocks like a DRL or for that matter Cipla?
IndiGo is looking quite good on the technical charts, although there has been a very strong momentum in the counter from the zone of 4700, and it has surged towards the zone of 54, 54.50. So these kind of corrections should be considered healthy, because again on the technical front it is hovering above the medium-term moving average. So I'm expecting that some bit of correction can be seen, but again the zone of 4900, 48.50 can be seen as a decent zone to accumulate this counter. So I'm not having a bearish view as of now, but again, some kind of correction can be seen in the going future.
Okay. Osho, within the auto pack, anything that stands out for you? Because we've had 2 days of green. I mean, auto is literally bucking the trend at this point.
The auto sector as a whole has not performed really well. Some of the counters are obviously doing one by one. On every day, there are some stock-specific actions from the auto space. So now Hero Moto have emerged as a very strong candidate. it has seen a very strong reversal from the zone of nearly 48.50. And on the technical front, now it is forming a rounding base formation. So I'm expecting that Hero Moto has potential to retest the 200-day simple moving average, which is placed around the zone of 53.60. So that can be seen as the immediate target in Hero Moto, and this can be seen as a buying opportunity in the short term.
Uh, Also, Osho, if you can give us a sense of, some of the private sector banks, HDFC, IndusInd was down 6% today. How does it look on the chart?
For IndiGo, I have a view that 1070, 1080 has been a very strong resistance zone. So that was a very crucial juncture for the counter. But again, in the recent period, we have seen a decent movement in the counter. So some kind of profit booking should be seen, and that should be considered healthy. Again, 960 is the zone where I am expecting the counter to get cushion. And that again, there onwards, we can look for accumulation in IndusInd Bank. Now coming to HDFC Bank, this counter have given a kind of a false hopes in last 2 weeks, but again in this week there has been decisive correction in the counter. But again, looking at current levels, I am expecting that at these levels one should definitely start accumulating the counter. 740, 745 has been seen as a very strong support zone. So at these levels one can look for buying opportunity in HDFC Bank. Not very much aggressive on the long side as a target, but again 790, 95 can be seen as the short-term target for HDFC.
And from PSU Bank, SBI, and maybe a Bank of Baroda or PNB?
PNB was having a kind of a positive technical setup. It has given a very strong breakthrough around the zone of 106, 107. But again, now at these levels, it has seen some kind of a strong rejections from the 200, the simple moving average. So I expect the counter might retest the zone of 107, 106 once again. But again, at those levels, one may look for buying opportunity in PNB as well. So PSU banks are looking quite decent as of now. But again, some kind of correction can be seen because Bank Nifty as a whole has given a breakdown. So I expect that banking index might have some kind of inbuilt movement on the downside. So some counters can see some kind of further correction or profit booking from here onwards. Not very much bearish on the PSU basket as of now, but some 1 to 2% kind of correction can be seen, and that should be seen as a buying opportunity for the PSU baskets.
Okay. And Osho, just I wonder what's the take with regard to some of the Adani group of stocks. There was some pressure on some of those names today. Also Reliance, some of the conglomerates basically, Osho. What's the take there, Reliance, Adani Group?
Firstly, for Adani Group companies, then we have already seen a very strong vertical rally. There has been a kind of a consolidation in the recent period for these counters. But again, after the consolidation, although it might be expected that from here onwards, after the time-wise corrective here, there might be some kind of positive development. But no doubt there has been a kind of a profit booking from the higher zone, although the technical chart is still very positive for major of the Adani counters. And I'm expecting some kind of correction should not be seen as worrisome for these counters, these companies. For Adani Group, I'm having a kind of a bullish view only as of now until there is a decisive breakdown below the consolidation zone. For Adani Enterprises, the zone of 2900 is a kind of a very strong support. So that should be very critical to hold. If it holds above the zone of 2900, then we might even look for buying opportunity. But again, it will be advisable to keep a strict stop loss of 2900, because if it slips below 2900, then we might see a further profit booking or even sell off in the counter. And for Reliance, there is no positive momentum as such now. Reliance has been into a kind of a sideways momentum. 1300, 1320 has been a kind of a very strong rejections level. So until we see a decisive move beyond the zone of 1320, better to stay sideways from there.
All right. Okay, Osho, thank you so much for joining us and giving us that perspective. We'll let you go on that note.
Thank you.
All right. So that sets us up well from a technical perspective tomorrow. Now, Infosys numbers coming through, and we'll wait for those numbers to come in fully. But 1% QOQ is what the indicative QOQ growth seems to be. On a constant currency term basis, 1% QOQ is what has been disclosed, and 21.1% is where the EBITDA margin number has come in at. The EPS has gone up by around 15% odd on a YOY basis. You've seen the AI revenue also is now 8.2% of the total revenue as a percentage of the total revenue. So that's quickly to start off with some of the first numbers that we're seeing. $3.6 billion is the large TCV deal wins which have come through in this quarter, which also looks fairly decent, frankly, broadly from a broader number perspective. I'm just going to quickly look at what the expectations were and try to kind of contextualize this. The dollar revenue growth was expected to come in at 0.5%. So this 1% growth is obviously marginally better. It signals a better growth and to start the year off, right? It's not just a better growth. It's a better growth to start the year off. 48,211 is where the revenue number, INR revenue number has come in at versus the 48,318 crore number expected. It was expected up 4% QOQ. It's largely there, right? Nearly 4% on a QOQ basis is what we've seen that number come in at. Operationally, I'm keen to understand where EBIT margin really lies. That's going to be the crucial.
That's what the EBIT margin is, which is coming in. If I can look at the things, the estimate was for EBIT margin was seen at around 20.03%. They have been able to maintain the EBIT margin at 21%, operating margins at 21% there.
But that's impressive, Sajid.
Yeah. So there is a currency tailwind that they've been able to do it. So QOQ growth is 0.8% and on a CC basis 1% for them. Financial services on a reported basis has grown YOY at 2.9%. But if you look at the business revenue segment, there's a slight decline which is coming in for financial services there, and North America continues to be holding off well as of now. So active clients have gone up on a quarter-to-quarter basis, and there is they've been able to the $50 million clients have come down by 3 from 88 to 85. And that could be a churn which is coming in for them. The top 5 customers is around 12.1% for Infosys. So yeah, from a total employee point of view, is the total employee count has also come down during on a quarter-to-quarter basis for them. So, but we have Sandeep Agarwal joining us. Sandeep, hi. How do you look at the first numbers? 1% CC growth coming in. Slightly better than expectation?
No, so if you see the whole sector this quarter, barring one company, I think everyone has given in line with expectation or slightly above expectation numbers only. So I think the most important thing to look into the quarter is that this was the quarter where everyone was carrying a lot on that there is a massive deflation, so which has not happened. So I think that is a very big positive to take forward. The TCV, as you mentioned, is also decent. So I don't see any big red flag. Obviously, we have to listen to the commentary and con call to have more clarity, but broadly looks decent.
Operating margin is also at 21.1, so a 20 bips increase on a quarter-to-quarter basis. It could be a function of forex currency fluctuation gains which may be coming in there, right?
Yeah, so means I have to see those numbers in detail, so can't comment. But broadly, I don't see big disappointment in the headline numbers.
How do you look at the profitability? I don't know if you've had a chance to look at the numbers, Sandeep. First off, there seems to be a slightly higher tax impact this time around, due to which the profit has come in slightly lower than estimates. Sandeep, how are you looking at that number?
See, on tax part, we have to do a lot of working because there are multiple subsidiaries, multiple angles, so very difficult to comment on tax part. We see results more up to EBIT level, and I think from that perspective, broadly, everyone is saying that it is broadly in line.
The new CEO designate which has come in for Infosys, Ashish Kumar Dash, who is now going to succeed Salil Parekh from 1st April 2027. following the completion of Salil's second term after over 9 years. And he's going to be the new CEO for a period of 5 years, and that's subject to shareholder approvals. Dash is he's an insider actually, having spent over 3 decades in with Infosys. Dash has held several leadership roles, which includes customer facing, delivery, and global operations. He also leads sustainability business across the company. So there's a new CEO which is coming in for Infosys, which is Ashish Kumar Dash, who succeeds Salil Parekh from April 1, 2027. Is that a surprise for you?
No, I don't think that is a big surprise because, we are all aware that there was a time period which has got over and there was a renewal which was to happen. So I think not a very big surprise, honestly.
Sandeep, curious to know, therefore, now, likely positive reaction on counters like an Infosys, just given the fact that the disappointment hasn't come in as much as the market was fearing?
So I will not comment on company specific how stock will react, but let me put it this way. I think the worst of the IT sector is definitely behind. And from here on, things will definitely improve. And that is what my call is. And if you do the numbers for next 3 years, they look really exciting. And I firmly believe that, the AI layer, the enterprise level AI layer has to happen, and that will happen. So definitely, I am not at all worried on the future. So I think things are at inflection point and they are improving, and that is the way we should see the whole sector.
For TCS went up, Infosys not as much. What do you think is happening here? Too much to read into or not really?
I think when there is an inflection quarter, we should not read much into any company because that is very difficult to say. So I think when the commentary of the management comes, we will know more. But generally at inflection point, you will not get any strong commentary or any weak commentary. So it will be neutralish kind of commentary. So let's wait what the management says, and then we can have, more understanding of what is happening.
3.6 billion on the large TCV deal. Are you happy? Are you satisfied with that number? The expectation, the street was expecting 3.5 billion. It's coming slightly ahead of that.
No, so, I would reiterate that, there is no big deflation for anyone in this quarter. That is a very big positive.
Yes, and this AI revenue disclosure that has come in at 8.2% as a percentage of total revenue. How do you look at that number, Sandeep, and how should one read that number in the larger context of both IT as well as Infosys?
It's very early to comment on that, but this number has to reach 30-40% at least so that, it starts materially contributing to growth.
I take your point. All right, Sandeep, thank you so much for joining us, giving us that perspective. Of course, we'd love to have you again tomorrow because stock reactions will happen tomorrow. You'll also have management commentary. So I will call you in for that. But that's, of course, Sandeep Agarwal of Sovilo Investment Managers, completely timed out on this edition of Market Edge. I hope it was helpful. Thanks so much for tuning in. From Sajid, myself, and everyone who puts this show together.